What's up guys, welcome back to InvestingPH. To start things off, wow, our market has now gone up to the 7,200 level. The last time it was like this was back in 2022. With this, my dividend portfolio went up as well. From my invested money of 2,685,300, my portfolio's value now is 3,390,684, giving me a 26.27% return, or 705,384. Still, more than half of my gains come from dividends, which the total dividends I've got is 385,899. Last August, I was given 4,999 in dividends. Two companies gave out that month, which were A-REIT and M-REIT. This puts my 2024 dividend income at 129,710, surpassing last year's income of 122,000. This gives me a latest 12-month monthly income of 14,199, or an LTM annual income of 170,000. This is from September of last year to August of this year. My dividends just keep getting bigger and bigger, and there's still more to come this year. Going to my portfolio, we can see most of the stocks have already recovered. Even with the negative stocks, if we also take into account the dividends I got from it, it's almost close to having a positive gain. That's why I can't emphasize enough sticking to your strategy no matter what. Just be patient. Most of the stocks in my portfolio have recovered even though we are still below the level of when I started investing. All thanks to consistently investing and reinvesting all the dividends I have so far. If you look at the Market Pulse section of DragonFi, the market sentiment gauge is bullish, and for August and September, net foreign and selling are now at a positive level for the first time in months, though still a bit small. Only 2.3 billion in August, and at the start of this month at 806 million. Now, I also want to share with you a new feature of DragonFi. This is their signature portfolio, featuring of course InvestingPH, where you can buy the undervalued stocks in my portfolio. So take note, this shows the stocks that are only trading below my buy price, and you can edit it as well, the number of shares or the stocks you would only want to invest in. How amazing is that? You can now see live the undervalued stocks in my portfolio, and yes, this is already my updated buy price for these companies, and I will update it now and then, especially if I have a new stock I'm investing in. You can also copy Kuya John's investments, Tita Globe Moneywise Engineer, and of course, DragonFi's signature portfolios as well. Also, there's no additional fee for this, and the best thing about it is if you want to support these creators or me, this is one way to do it. But again, a reminder, before you buy the companies, be sure to do your research first. So if you want to get a hold of this tool, sign up now to DragonFi. Their platform is by far the best I've seen and used. They have a lot of tools in store for you. All the news updates, screeners, research, intrinsic value calculator, you name it, it's here. Use my link below to sign up, and both of us can get up to 1,500 based on your initial deposit. Going back to my portfolio, year to date, my holdings have increased 15.1%. Slightly trailing behind it is the market at 14.3%. For the PE ratio, my portfolio's PE ratio sits at 6.6. Now, I'm not sure what market they are comparing this one, but I know this is in the Philippines as the PE of our market is at 13x. But anyway, I think this is the Asian market. Price to sale 1.1 compared to 1.6. Even though my portfolio went up based on discounted cash flow, total value is still 43.7% undervalued, as the fair value of my portfolio is 6.01M. Dividend yield is 6.5% compared to 6.7% of the market. Now this is where I'm sure that this is in the Philippine market, as the yield of the PSCI is only at 3%. Dividend growth rate of my portfolio sits at a good 3.6%, and the payout ratio is at a comfortable 41%. Imagine, I hold a lot of REIT stocks. This is the reason this went up to 41%, as you know REITs are required to give 90% of their distributable income to its shareholders. By the way, if you haven't yet watched the video Usapang Mercado hosted by John Lim, CEO of DragonFi, guest speakers Moneywise Engineer, PSE Warriors, Kuya John, Sir Warren, and of course your very own Mike from InvestingPH, then you better watch it. This is my first live webinar, but don't be disappointed as I still haven't shown my face. You will learn a lot from it, strategies, points of view, and thoughts about the market reaching the 7,100 level. We talk all about that here in this video. I have a link below. I also mentioned the stocks I bought for the past months, but of course, I'll talk about that in this video as well. Okay, I added another REIT to my portfolio, which is RCR. I've been researching this stock for quite a while, and it's trading below my buy price. The dividends of RCR have been stable since IPO, growing slowly. For this year, RCR's net income still grew by 4% in the first quarter of 2024, even though rental income slightly went down. This because of the decrease in occupancy rate from 97% last year to 95%. The increase in their net income is because of their other income, which is from late payments, forfeitures, and interest income. As of March 2024, these are their real estate assets. Now, my computed intrinsic value of RCR is 8.11, putting a 30% margin of safety, giving me a 6.08 buy price. Though my main purpose for REITs is of course more on dividends, I see this REIT growing over the years, and given how it has had stable dividends ever since, it's a good addition to my REIT stocks. Hopefully, I'd be able to invest more money while it's still below my buy price. Another stock I bought this month is I added more to C-REIT as it's slightly below my buy price, and more to FGen as well. As I mentioned in my previous updates, I'm increasing my position in energy companies because I see it as when the economy is growing, of course the more the need for the services they provide. And now they are investing more in renewable energy, which I want to support. These three, RCR, FGen, and C-REIT, are the bulk of the stocks I bought last month. I added some as well in Megaworld when its stock price was below 1.95, and in FLI as well, and also reinvested dividends to LTG. You know, the removal of the minimum fee gave me more freedom to spread my money. Now I can redistribute the dividends I got no matter how small it is. Now, real estate companies is still the laggards in all industries, but their earnings have recovered and I see it will continue to do so. This way, with the price still very low, I'm maximizing the opportunity to invest in these companies, though I'm just adding a small amount to it from time to time. I also sold one stock, which is Ayala Corporation. Now, AC is a great company, yes, but I sold this to give me more capital, and I want to remove the low dividend paying stocks in my portfolio, which AC is the only one that has a yield below 3%. With that, these are all the stocks I own. Globe still take up the largest share, followed by LTG and DNL. For C-REIT, it has now increased to 4.2% of my portfolio, FGen 3.5%, and RCR's share is still very low. However, I know this will increase if the stock price stays below my buy price. But if you look at my portfolio holding based on capital or market value, Globe and LTG still take up the leading spot. DNL, MBT, AUB, DMC, Security Bank, AP, MREIT, and Costco is the largest in my holdings. For the distribution by sector, real estate is at 29.6%. This is subdivided into specialized REITs, real estate, and office REITs. The second largest is financials, my bank holdings at 21.3%, and industrials 14.1%. These are my holding companies DMC and LTG. Telecom 10.8%, consisting of Globe alone. Utilities 8.9%, consumer staples 8.1%, and materials 7.2%, which is solely DNL. That's why I'm balancing my portfolio to increase my stake in utilities. Though C-REIT is in the real estate sector, it's mostly an energy company as it leases 100% of its land to renewable energy farms. If you're curious as to where I get all these data, well, this is from Simply Wall Street. They have a bunch of tools for you, from stock screeners, a watch list that updates you if the company releases its earnings, insider buying or selling, dividends, and when the stock is trading below your buy price. And what's more, they have a portfolio tracker to let you assess the performance and health of your portfolio. So if you want to try it out, they offer a forever free basic plan, and if you want to sign up to get unlimited access to all the tools, then use my link below to get up to 50% discount. Now, with the market rising, some stocks reaching all-time highs, this is where I'm always careful. See to it you're continuing your strategy of buying strong companies at a fair price. Don't be swayed by your emotions to ride in when the stock prices are climbing. Always assess first if it falls below your buy price. If the company books higher earnings, then recompute your buy price. Never let emotions decide your investment decisions. This is the only hard part of the market rising. It gets harder to find great companies at a discount. That's why I don't get it when new investors want their portfolio to climb so fast, especially for those who rely on their monthly salary. When stock prices rise fast, the less you can invest in those companies at a cheaper price, which means the lower money you can get. Unlike when stocks are trading sideways or at a discount, you get a higher yield at a better price, so that when you invest a good amount of money in it, the more gains you would get. So for times when stock prices are high, be careful, reassess first your strategy, don't be swayed by emotions and greed. With that said, I hope you've learned something from this video, and if it did and still haven't clicked the like button, I'd appreciate it if you do so before leaving. Thank you and see you in the next video.